Hey, everybody. Thanks for joining us, and I'm really happy to be here with 4 esteemed colleagues from the fintech landscape. Ylva from Simply Asset Finance, Rob, Eric, and Conrad Ford from Allica Bank, and we're here to talk about SME lending. You know, what does that mean? What can we do to ensure that this important part of the economy is able to thrive and really deliver what it does to the UK economy and more broadly. So in order to set a bit of context, I think I'd like to start by asking Rob, how do SME lending and wider economic growth intersect? And what can be done to ensure that SMEs are able to thrive and contribute to the economy?
Great. Thanks, Daniel, for having us here. Such a great topic to discuss because the SME economy is struggling worldwide. There's still a huge gap in terms of funding. The worldwide gap is currently, I think, $5 trillion estimated, and a lot of that is in the smaller businesses that don't have access to their banks, they don't have access to the credit cards, the invoice finance, the overdrafts. Now, we've shown that by integrating with platforms and with payment acquirers like Klarna, like WorldPay, like Barclaycard, that any SME that we fund not only has a 20% higher growth rate than the cohort that we don't fund, they have a 50% higher success rate over the first year, needless to say. But the third part is they add, for every pound that we fund, they add £1.50 to the UK economy. So all those numbers together, if you put $1 billion into the economy, you get $1.5 billion output. But you also save 2 to 3 jobs in the wider economy. So we funded approximately $1 billion worldwide in 9 countries. We've saved over 100,000 jobs and added 1.5 billion to the economic value add. So it's not a question of whether every extra dollar has the right impact. It has. It just needs to come with a responsibility, with the the frictionless kind of finance that we provide. It has to come in a way that businesses can afford to repay as well.
Great. Ylva, any thoughts on that?
Well, I think it's fairly straightforward. So the UK needs growth. I think everybody agrees with that. And you can achieve growth by either, obviously, importing workforce or boost productivity within the businesses that already are here, established. Now, to boost productivity, you need innovation. And innovation, obviously, on a day like today, we feel like we're doing really, really well in this country. You could just look around you and see and be impressed with what's going on. And that is great. The UK is a global leader in that. However, that is new to market innovation, where the UK is falling behind the G7 countries is with the innovation to businesses. So businesses actually coming up with innovation or implementing innovation that will drive productivity. So those are businesses out there that need to be able to purchase new equipment, new machinery, come up with new processes, new ideas to how to boost and grow their businesses. Now, one of the key elements cited by SMEs for not doing that is obviously the lack of access to funds and the cost of funds. Now, I come from Simply, an SME lender, and our job is to make sure that we get funds out there. And that is where the new-to-market innovation that we see here today can help someone like me bring that out to businesses so I can reach more SMEs. I can get the money out to them so that they, in turn, can grow their businesses and boost the economy. I mean, the opportunity is huge. There's 5.5 million companies across the UK, 99.9% of those are classed as SMEs, i.e. 250 employees or less. Now, that represents over half of turnover in the UK economy, more than 60% of the employment. The opportunity is huge. So with a bit of investment, innovation, productivity boost in the SME segment, we can actually go a long way in driving that growth.
Yeah, I think that's so important because we're still not at the same growth levels pre-pandemic, 3 years on. So we've really got to pull it together and help these businesses drive the economy forward. But Eric, coming to you, what are the biggest challenges faced by SMEs in accessing finance, and how can tech help us to overcome those?
Well, if it's not tech, it's manual, so you have to fill paper. So I think tech is doing a fantastic job to attract and retain new lenders. The difficulty for lenders and for people who are looking for money is to find each other. That's what, origination is the problem we see. So I think we've decided to add, in fact, our job at Bankable is to make our customers bankable. So it's very simple. So we've decided to add credit. By credit, I mean working capital, because there's a big gap that we see. And I think if you look at the UK, there's a 9.7 billion, of capital that was injected into the top 10 fintech. All these fintech, they do debit and prepaid. So that's a credit opportunity that we see that is huge for this market. So I think clearly there's the difficulty that we see is that you can be a fintech or a bank. Origination is a big issue, but it's something I think we can sort out partially with other colleagues. I think I like the partnership approach that you mentioned. This is clearly the game. It's not we are the best and we're going to, that's the 80s, the world has changed. So it's who can we collaborate with? Who can we integrate to access more and more SMEs and make sure that this country is exporting again, or more, I mean, if you look at the US, there's just 2% of the company that exports, So we're better here, but it's, there's, clearly, we all know the 2%, it's Apple, it's all the big companies, but the majority, they don't sell outside their state. So exporting, I think we are, at Bankable, we're a UK company, we export 90% of our, so we're a UK exporter, we're very proud of that. But we'd like to others to encourage them to go this route. I mean, of course, Brexit does not help, but if you interview, what I said when we prepared this call is, it's very important to listen to entrepreneurs in the UK, not necessarily people who are in the square mile or in the city, people who are in Manchester, in Leeds, in Lancaster or Scotland. I think they're struggling. They felt a bit unheard. So it's the people we want to capture with a team, basically.
Yeah, I mean, it's really interesting. 61% of SMEs who do operate outside the UK market report that clearly Brexit hasn't helped them. It's been a significant detractor in being able to do business easily. Evidently, the long-term picture is yet to emerge. There might be benefits, might be more flexibility elsewhere. But right now, what are the challenges and opportunities in international markets, and how can lenders support them in that? What do you think, Conrad?
Well, one of the phenomena of the last decade or two is often called micro-multinationals. So in other words, we have this phenomenon. Traditionally, if you went internationally, well, you'd start a business in one town, and then you expand to lots of towns, and then nationally, and then eventually, when you're very big, you go international. Well, the phenomenon of micro-multinationals, one of the drives of that was actually e-commerce. So you suddenly discovered that people were asking for your products from another country on Amazon or eBay, and you start selling it. So we have this phenomenon of businesses going international more early and more often. Unfortunately, in the UK, a lot of multinational activity is importing stuff. So importing stuff from manufacturing nations, the likes of China, and selling it here. But those businesses as well struggle with the challenges of international trade. So breaking those down, it is much harder to get finance for international trade. Now, there's a good reason for that. The fraud risk on international trade is really off the charts compared to what we are used to in the UK, in domestic trade. So there's a very good reason for it. So international trade finance is very hard to get unless you're a very established prime business in the UK that can actually trade off your own credit rating. But there's other challenges as well. For example, FX hedging. The average small business, SME, doesn't really understand the consequences of SME hedging. And a bit like bad debt protection, you tend to actually buy it once you've actually learned the hard way that your entire profit margin on a transaction has disappeared because the exchange rate has changed. So what can we do about this? Realistically, I don't think that the commercial finance or private sector finance market can fill the gap in its entirety because international trade finance is expensive to administer and very high risk. So the government has a very important role to play, and indeed they do play that role. We have an institution called UK Export Finance. In my experience, there's a lack of understanding of what that institution does. I wouldn't claim to understand it myself very well. And then also in the areas of like FX hedging, what can we do to actually educate the SME population to make them understand the risks that they're taking so that they can actually mitigate them? You know, how do you explain an FX forward and an FX future? And how do you make it a digestible product that's easy to buy, simple, transparent terms? I think these are the challenges we need to overcome if we want to really drive that, because when you were even though we weren't part of the Eurozone, when you're trading with Europe, a lot of those risks go away. You know, it's a similar legal framework. You have the European single market. If we're going to start trading heavily outside of the European Union, these things become real challenges for the SME population that we have to overcome.
Yeah, absolutely. Ylva?
Can I just add, and I know I agree with everything that's been said, but if I just bring it back to a little bit of reality and really to the basic level, and these are the customers that are the majority of that SME and that opportunity segment in the UK. So let's imagine a logistics company, a truck driver. He's got 5 trucks, the business owner is actually one of the drivers, and that person has an opportunity to grow the business. As another contract up for tender, he could actually go and get that. And that would then lead to him not only growing the business, but also employing another person. So just exactly as an example, this business owner is not the kind of person that sits behind a computer during office hours. So step number 1, reaching the customer, a bit like you were saying, Eric. How do you reach your customer? So what we have done at Simply, and this is how you utilize tech and bring it back into proper reality, we have built everything that our reps need and surfaced it through an iPad for that person to go out and meet with a customer in a service station along the motorway during one of the jobs to sort out the finance, listen to the business challenges and understand what would work for that SME and sort it out then and there. That's one problem solved. The other thing is around making the right lending decision, because obviously we need to get ourselves comfortable with this credit. So what we have done is we've also tapped into a huge amount of data sources, because our SME, our business owner, he's not great at admin. Some of it, he keeps some bank statements in the truck and some at home, and accounts may be difficult to locate and all of those things. Doesn't make it a bad credit at all. But the hassle of having to go through a loan application is just not one that he's particularly good at. So what we are then doing is we're tapping into all this data, and we need a lot of data to make the right decision when it comes to SME lending. So getting that data gathered, also surfacing that for the proper analysis, and then making a decision to get the right decision. So the reach and the right decision are challenges to overcome when it comes to SME lending. So, but again, that is what we have to do as lenders to get it right and to actually get to that SME out there.
Yeah, I think one of the things I'm passionate about is bringing a consumer-like experience into SME lending, because I think there's a whole bunch of people there who aren't established, who might want to leave their job and start their own business, and they need to be able to access finance as simply as you can as a consumer. And interesting what you were saying there, Ylva, about people being able to go and meet wherever they need to. I mean, clearly that's a key part of an asset finance business, which is what you run. But how does the difference between online and digital come into this space? You know, you've got everything from somebody that's running a 249-person company turning over £10 million a year to somebody that wants to start a local coffee shop. You know, that might become the next Starbucks, but who knows if they can't get access to what they need. How do we as an industry deal with that scope and try and tackle both ends of that? Let's start with Eric.
With me?
Yeah.
Well, my view is a bit extreme, but I think you should, if you have a startup with one person and you want to create a Starbucks, you should sell your car, sell your house, get your savings, and you won't have access to lending. That's been like that for a century. I don't see any change in the coming well, can't talk about centuries ahead, but in the next years, I think it's the rule. It's difficult. You have to, there's no miracle, and in fact, your imagination is capped by the money you can gather. So, I mean, on my side, the first company I've created went from friends and family to IPO. So, friends and family, you sell everything you can to everyone, so you're completely selling all the time. So you're almost rude, basically. Yeah, because your obsession, this obsession about getting money, otherwise, so that's the sad reality of an entrepreneur. It's not going to be alone anytime soon. It will be hard, difficult, and almost impossible. I mean, we're all survivors. I mean, it's difficult to create a company.
Yeah, I mean, my hair color attests to the fact that I've done this, but when should you be able to access finance then? Let's accept that day one, yeah, you're taking out maybe a loan in your own name, maybe you're maxing out a credit card, maybe you're selling assets, if you've got them, of course, because some people don't have any assets to sell. How far down the road do you need to get? And to go back to Ylva's point, where you don't have access to traditional data sources, where you're not on Dun & Bradstreet, how can lenders use data and AI to make smarter decisions on who to lend to? Because as the previous panel touched on, you could be Royal Bank of Scotland with a balance sheet of God knows what, and you can still go to the wall. So I don't think size is the answer. What do you think, Rob?
Yeah, shall I give my view on that? So we fund businesses from as little as £1,000 of £1,000 of revenues per month. So very, very early stage. But as a business owner, you have two options. Either you borrow personally from your credit card, your friends and family, you put that money into your business, or you have to land on a business idea and maybe raise money in the equity markets. Now, that's difficult. So what we have enabled businesses to do is small businesses, the coffee shop that wants to compete with Starbucks, let's say they do $1,000 of revenues or £1,000 of revenues per month. They can actually sell that future revenues at a discount to us, and we fund them to buy, a new coffee machine or invest in, additional staff or whatever it is. So there is a way to raise that money from quite a low amount of, quite an early stage. The problem is that it's not for everyone, and the problem is it's very specific to industry. It's very specific to the underlying credit risk. We can fund people through a Klarna or an Uber Eats or big platforms that they trade through. We can get the data and then we can make the decision on. We can do that from as little as 3 months, but you don't get a good price if you get 3 months of data. It is very, very difficult with all the data in the world that you can have on the data on a business to make that decision. So there's a lot of personal credit risk coming in, or personal credit history coming in there. Now, you can have a very sophisticated AI algorithm. We're now at version, I think, 8 or so of our algorithm. We've over the years developed it with lots of data points. We now have hundreds of thousands of data points. We get every single month, we get more than 1 million businesses data points into our algorithm that we analyze and assess. Now, you have two things that you can do. One is you use those data points, so you make the right decisions. Hopefully, that's what we do. But number two is you can also use that data to assess whether someone in the future might be eligible for funding. Now, we do that proactively. So we look at the data and give you a message saying, keep trading like this for another 3 months, and you might be eligible for funding at that point. So we coach people into getting into that, into funding. Now, that is a privileged position to be in because we get that data through our partners. But how do you get that data in the open market? Now, the only way to get it is either you log on to open banking, you share your data with some lender or a platform, or you just do it on your personal credit score. And that's what most entrepreneurs are doing at this point. And I don't think that is bad, by the way, and I don't think that the government should step in to change that massively. What I do think a lot of people don't know is there's, for example, the government has support for startup loans, which is £25,000 on the basis of your business plan. Now, it helps you to do two things. One is actually put a business plan together that you can fund. And number two is actually think about how do I make my company fundable? And that's kind of the two concerns that I would have for new starters.
Yeah, definitely. So how can we ensure that SMEs have got access to a variety of funding sources. So we've got loans, we've got asset finance, we've got overdrafts, we've got invoice finance, we've got venture debt, as you were touching on earlier. Conrad, where do you see that mix coming in, and what about educating business owners? So, Ylva was talking about the hypothetical truck driver. Does he know the difference between invoice discounting and factoring?
He doesn't care. He doesn't care.
So those that don't know my background, that's exactly the problem I set out to sort out when I launched a business called Funding Options, which I don't do anymore, sold to Tide recently. Funding Options was actually predicated on exactly that problem statement, which is maybe the problem isn't lack of lenders, maybe the problem is that lenders and SMEs can't find each other. And I still believe that to be the key problem to solve, by the way. I don't think we really have a supply problem of SME lending. As at now, there's tons of appetite to lend to SMEs. The problem really is that behaviorally, most established SMEs will first go to their bank, and unfortunately, a large proportion will give up when the bank says no. Obviously, big bank lending to SMEs is a very emotive statement, a very emotive topic, but actually structurally, there's a reason the big banks struggle with SMEs. They're not high volume and simple like consumers. They're not very complex but very high value like corporates. They're awkwardly stuck in the middle. And the big banks struggle with that. If you're I won't name a name, if you're one of the big 4 banks, you would rather do one £10 million loan rather than 10 £1 million loans because your processes and infrastructure are so inefficient that the cost of doing them is the same regardless of the loan size. So how do we solve this problem of connecting them? Well, I set out, the original business plan of Funding Options, it literally said money supermarket for business lending. I was like, why hasn't anyone done this? This is obvious, right? I'm going to be on a yacht in 3 years' time, right? Well, it turns out that purely digital finance does work for micro businesses, the really small businesses. So numerically, there's about 5 million micro businesses in the UK. But actually, micro businesses can't sustain much debt. Most of them actually aren't that ambitious. They're not trying to build Starbucks. They're trying to build a lifestyle business. They just want to have their own cafe. And actually, numerically, the most common source of finance, someone's already touched on this, is personal credit cards. In other words, they can finance buying coffee granules with a personal credit card. So why bother going to search the market? The 500,000 or so established SMEs is a much bigger economic segment. Right, these are the unsung heroes of the economy. These are the, when you drive into an industrial estate on the edge of a town you've never been to and you have to do a U-turn, and there's little factories and little warehouses. These are the core of the SME population. They represent around 1/3 of the economy, unlike the 10% or so of the microbusiness segment. And it's that segment that's underserved. Now, what I discovered building Funding Options is that they need a human interaction. Yeah? So although I set out to build a purely digital business, or purely online business, what I actually discovered is the trick is to use digital to make human interaction more efficient, more effective. So it's your analogy of meeting somebody and talking to them on an iPad. That was the problem I actually ended up solving, and that was the problem really to be solved. So how do you use digital to make human interaction more effective? Now why do they need the human interaction? This is quite an important point. These are consequential, life-changing decisions. So 3/4 of all SME finance is finance against the premises of a business, the factory, the shop, the warehouse. This is like buying your home. This isn't a kind of like, I'll go do that in 5 minutes. It's a really consequential thing. It's life or death for your business. And you want to understand, can I afford it? Is it cheaper than renting? What tax structure, what legal entity structure, a human being needs to be involved. So how do you overcome the problem that the big banks have, which is they can't efficiently service the customers? How do you use digital to give a better human experience? That is the problem to solve.
But can I add to that? Because that's exactly the point where you need to go very far in sort of investing in your digital processing, your automation, your sort of building the sort of processes in the background that have to be so quick and easy to maintain, so that you can afford to up the level of engagement and create that high-touch, personalized engagement with the SME. They are heroes, absolutely, and I think that is the point, that if we want to unlock the growth in this country, that is where we need to look. And those are the businesses that actually tick everything along and make this country work. The roads are being built, the sort of hospitals are being served, there's food on the supermarket shelves. That is what we're talking about here. And for me, I mean, we talk about AI, we talk about data analytics, we talk about all of those advanced things, but yet as we speak now, I'm sure that there are plenty of SMEs across this country busy copying bank statements, trying to find those accounts, scanning them, trying to upload them, attach them to an application for funding, and send them into one of banks or funders out there. So there is all the solution that we need to be able to create that journey, that engagement. I mean, simply, we've done a lot in this, and we call it exactly what you're talking about. We call it technology with a handshake, because that handshake is what makes the deal. And but we need to get all the solutions that we get here out to the customer. I mean, that's why I'm here today, because I'm inspired and I'm looking for all those options so that I can perfect the customer journey and keep on inventing and keep on investing. Because to me, the heroes, the ones that do drive the economy, they need it and they deserve it. And it's good credit, but it takes skill and it takes time and it takes an investment to really get it right.
Yeah, I think that's a great point, and it touches on a number of things that we've said through the session. You know, we've got people doing things manually, people being declined by the big retail-focused banks, and I think the irony is that if you are photocopying statements and attaching things, you're probably applying to your bank, who may well decline you because they don't understand or have the appetite to do SME lending. Because yeah, it's in comparison to corporate lending, for the same amount of capital deployed, it's going to be much more expensive to service. So why would you do it if you were HSBC or whoever? So I think there's a huge opportunity still in SME lending. And you know, we write software at QV Systems to enable SME lending as well as consumer lending. So it's something that I'm really passionate about. But in the last few minutes, can we talk about what advice you would give to SMEs who are looking to access finance, and how can they best prepare themselves to succeed? And I think Ylva wants to talk about this and tell me why she doesn't like this question.
I really don't. But I mean, and let me explain. As my kid would say, no offense. But the question implies that the SME need to sort of, I mean, the old-fashioned picture, you would have the expectation that SMEs or business owners who wanted to get a loan or funding for the business would line up nicely, come to the banking building, cap in hand, and ask for a loan. That's not good enough. I think the onus is on the lender. I mean, we have it all here in this room. Just piece it all together to be able to trade and lend to SMEs on their terms. That is what we need to do. And there's no excuse in this data-rich world to sort of decline someone because we don't know enough about you. Just find the data and turn it into a lending decision that allows that SME to get that next contract, that next employment going, and then realize their dreams, because they're entrepreneurs and they deserve it.
Yeah, and I think it's good to point out there that almost 50% of SMEs are what's classified as permanent non-borrowers, so they've got no intention of borrowing money. Now, is that stifling their growth? We don't know, but you know, I think there's a lot of outreach that needs to be done there. Rob, what do you think? How can they make it work for them?
Needless to say, I'm a big proponent of finding all the good data and making sure that you have open banking data, and you have transaction data, and you have customer data, et cetera, et cetera. There are things that small businesses can actually do to become more attractive for a lender to look at them. Well, one of them is actually manage your personal finances right, because a lot of lenders look at your personal finances. So if you miss paying that Vodafone bill or that one bill in your personal life, it will reflect on your business life, most likely, especially if you do an unsecured loan. So banks will look at that. Most lenders will look at that. If there's not enough data, that will start hurting you on your funding. So manage your personal finances as you would manage your business finances, or maybe vice versa. Doing 10 applications for finance will actually hurt your chances of getting funding. So we were talking about digital versus non-digital. My quote is always, with Liberis, we look at data before people apply. Then we reach out to them to actually get, to make sure that they're already pre-approved for funding. The last person you want to have applying on your platform is the person who goes on Google and applies and says, I need money right now. That's the worst customer you can get. So you want to pre-approve them or pre-select them. Now, that's kind of the point of SME finance. Manage your personal finances, apply once with someone you trust.
Great. Anything? We've got 30 seconds.
I'll just quickly add, you go to a lot of advice websites, including government websites, they'll tell you need to prepare a business plan, cash flow statement. Generally speaking, lenders don't have the time or to actually look at that stuff. So a lot of that stuff is actually quite misleading. Get the basics in order, yeah. The stuff that is your business right now, your cash flow profile, your personal credit rating, get those things in order because those things will rule you out. And your credit score is something you can work on too.
One thing I can add, I think on our side, I think in order to access more SMEs, what we've decided is to go vertical. So in fact, we will underwrite a sector, an industry. So we go B2B travel is one industry that we know well. Spend management, all those fintech doing spend management, they have clients. We can create profile to serve them with working capital. So the verticalization is a way to be more intimate with the client and serve them better. Because we can't know all industries. So I think we have to reduce in order to go deeper with those population.
Great, thanks. Right, we're out of time. So thanks, Eric. Thanks, Rob, Conrad, Ylva. It's been a pleasure, and thanks for listening.
Thanks, Eric.